Welcome to the Mentor Podcast, where the most highly motivated entrepreneurs come to get their weekly dose of financial stability with host LeGrand, as well as other nationally recognized thought leaders who will teach you how to get, grow, and protect your wealth.
Hey everybody, Ron here. I get a lot of requests to do a class on structuring your empire, entity structuring stuff. So I've decided to do one for you here. But before I do, this is a broad subject, and of course I can't teach it in the few minutes we've got together, but I'll do the best I can. I'm going to give you the basics. Before I do anything, though, I want you to know I'm not an attorney. I won't be sending you a bill. So keep that in mind. I'm not giving you legal advice. So let's start with the basics. And you're probably going to want to write this down. All right. Now look, what I'm about to tell you, you do not have to do any of it. If you're going to buy one or two deals, you probably don't need to do any of this stuff. But if you're actually going to run a business and buy and sell houses, even if it's 5, 6, 8 houses a year, you're probably going to need to set up like this. So these are just my suggestions. I will tell you I have these entities, and there's very good reasons why, but I'm not sure I'm going to be able to get through all of them today. But let's start and do the best we can. Over here is what I call Llca, and this is the LLC that I would like for your IRA to own. And there's good reasons for that. And because this is the LLC that you're going to do business in tax-free if it's a Roth IRA that owns the LLC. And there's, first you got to have an IRA. We use Quest IRA. That's questira.com. They do a good job for us. They're easy to work with. They come to all of our quick start boot camps. And when you get an IRA set up, now you want to put at least $1,000 in it or so as a contribution. And then you can take $1,000 to form this LLC. Now there's several steps to that, which actually are posted on your Gold Club site on how to set up an IRA-owned LLC. But it does have to be formed with a state, which is nothing more than you filling in the blanks, and make the IRA the owner. And then we will need to get an EIN number for this LLC. But once this LLC is formed and has a bank account, it is ready to do business for your IRA, and that's the key. So the day you get this up and running and funded with your $1,000 investment to form an LLC, now this LLC can buy houses for you or anything else your IRA is allowed to buy, instead of your IRA having to buy it. There's several reasons. Number one, if I have my IRA buy a house for me and I'm dealing directly with Quest, gee whiz, every time I want to put up a $100 deposit or collect rent or make a payment or spend any money on the property, I got to fill out a form and get them to send me the money. Pain in the neck. I don't want to do that. Plus, I think there's probably a transaction fee every time they send you money. So just stay with me. If I take $1,000 out of my IRA and I form this LLC, from that day forward, the LLC writes the earnest money deposits. It collects the rent. It pays the payments. It does anything and everything that has to do with the properties that are in that LLC. So I eliminate the need going back and forth with Quest. Plus, it also, when I take title to properties, in other words, this LLC is going to buy some properties. It can be short-term or it can be long-term. Doesn't matter in this case because since the IRA owns it, it is going to be tax-free. Most of them are going to be tax-free. So I'll come back to which ones aren't in a second. But regardless of how or who owns a property, they're all going to be titled to a land trust. That's LT. That stands for land trust, not lieutenant. Okay. So regardless of which entity owns the house, the land trust is going to own the house, and then you can decide which entity owns the land trust. So take a look. I got 2 land trusts in each one of these entities, but they all go down here, and the beneficial interest are these LLCs, whichever one is applicable. So if it's your IRA, of course, the beneficial interest of the land trust would be LLCA. Now, the reason for that is I don't want anybody don't ever take title to a property and have your IRA as the owner of that property on public record. That is deadly, deadly, deadly. Once everybody talk you into that. Remember, if a big calamity were to happen on your property, big fire, multi-million-dollar judgment, that judgment would be against the owner of the property. So the owner of that property better not be your IRA, because if it is, everything in your IRA is gone. That's one way they'll take your IRA from you if you put it out there and you make it the owner of something that has a big issue. In this case, land trust owns the property. Land trust owns one house. So the only possible thing you can lose if something happens to that house is that house. Your LLC is not affected because it has no liability. It's the beneficial interest of the trust. And of course, your IRA is not affected because it's the owner of this LLC. So all the liability goes up here to this land trust. One house, one trust. That's the way I want you to keep it. All the way across, regardless of who owns the trust, each house is in an individual land trust. Now, you have courses on land trust on your Go Club site. You have the warranty deed to put it into a trust, and you have the declaration and agreement to go home and fill out to put in your filing cabinet. And that's the only place the beneficial interest is disclosed is on that land trust agreement. Therefore, land trust gives you total privacy. Nowhere in public record does it show who the beneficial interest of the land trust is. And privacy is just one advantage of the land trust. Another one is lien attachment. A lien against you or judgment against you will not attach to a house you do not own. You do not own a house that's in a land trust. The land trust owns the house. You just happen to own the land trust. Or in this case, the IRA happens to own, well, in this case, the LLCA happens to own the land trust. Owners have no liability. Owners do have liability. But remember, the LLC is not the owner, neither is your IRA. The land trust is the owner. So the land trust is the only one with a liability. So a lien against you does not attach to a property you do not own. I hope you got that. And thirdly, if a house is in a land trust and the owner dies, well, the owner dies. Trusts don't die. People die. So there's no probate. Totally eliminate probate just because your house is in a land trust. All right, and that's a simplified version. I get it. Going to need more studying on this, but right now I'm going to do the best I can in the time we got. So let me finish this LLCA here. Now, again, your IRA will own it, but you cannot manage it. You can't manage it because, to make it very simple, you cannot directly control the money in your IRA. And as far as I'm concerned, if you control the money in the LLC that is owned by your IRA, you're controlling the money in your IRA, and I wouldn't want to try to defend that to the IRS. So you can't write checks on your IRA. I know there's some companies that let you, but I'm telling you, the smart people I know, no one wouldn't want to go near that one because I've read it in the code myself. You cannot directly control the money in your IRA. Now, obviously, you're telling the custodian what to do with it, but you can't write checks on it. So this LLC writes checks. Now, if you're the manager and you write the check, you're controlling the money. So you're going to need a manager to manage the LLC that is not you, and the definition of you is you or your spouse or either of your parents or grandparents, children or grandchildren. Anybody in either of your linear descent, up and down, cannot be compensated in any way, shape, or form from LLCA. Therefore, they can't touch the money, and they can't get paid for any of the activities of LLCA or from your IRA. That's the one rule you better remember, because that's the rule to get you in trouble if you start violating it. So you treat your LLCA just like you treat your IRA. Can't do business with you or any other entity you control, which means A, cannot do business with B or C or vice versa. Can't loan money to each other. You or yours cannot even live in a house owned by this land trust that's owned by the LLCA. You can't put houses in it. You can't do anything except buy houses on land trust that's owned by the LLC, that's owned by your IRA. So I hope that became clear, because if you do, you get caught doing that. It's called self-dealing, and literally that could wipe out your entire IRA, because if you do get caught, they might just say, I'm disallowing your IRA. So everything that you thought you were doing tax-free from the very beginning, they'll go back and they'll tax you on it with penalties and interest. So don't let that happen. Now you see this big old black dark line here? I call that the Mexican wall. You cannot cross that Mexican wall, you're going to get shot. You cannot do business with either one of these two guys right here. So keep it clean. All right, let's go to B. B is your operating entity. I mean, if you're going to do much business, you're going to need one of them. This could be an LLC, could be a C. Most people use LLCs. This is the entity for short-term properties. Short-term, meaning wholesaling, rehabbing, and retailing, or anything where you just get a check on it and you don't have a tenant in it. All short-term money goes here, but this also pays all the bills for operating the entire thing. Literally, this will pay all your expenses of finding the properties for C or A, for that matter. It should pay you a salary. And in fact, you should start charging off everything you can think of that even smells like it's a business deduction for this. then you're paying with pre-tax dollars instead of post-tax dollars like you're probably doing now. For example, if you drive a car, that's post-tax dollars you're spending on that car. You should be spending money on that pre-tax. If this LLC owns it, you should have a debit card on the bank account here. Stick it in the gas pump. Let this LLC pay for your gas because most of it is going to be for business purposes. It's exactly what I do with my car. My accountant puts 80% on business and 20% on personal. So LLC-B will also buy properties with a land trust, short term, all your flippers. You can manage B, and you probably will manage B. You can own B, but don't own it one person. You really never want to have an LLC that's owned by only one person. That's called a solo-owned LLC because it's a dangerous thing if a predator wants to come after you and they find out you're the only owner of that LLC. They literally can take that LLC away from you and literally go into your LLC's bank account, put a clamp on it because you're the only owner of the LLC, even though the account is in the LLC's name. So you want to have multiple owners of your LLC, and then they will probably not be able to touch the assets that belong to the many instead of just the one that they have a judgment against. Now, LLC-C is for your investment properties. In other words, this is a synonym for tenant. C means tenant. There's a tenant buyer in the house. Again, we take title on the land trust. LLC owns the land trust, but you own the LLC, not solo, and you can manage the LLC. So you can be the manager of each LLC here. You cannot here. You can even be the, let's talk about the trustee. Each land trust is going to need a trustee. Now, I live in Florida, and an LLC can be a trustee. That's not true for all states. So in states where an LLC can be the trustee, I'm going to use the LLC that is not the one receiving the money for the trustee. The trustee and the beneficiary cannot be the same or you don't have a trust. So in other words, I can't have LLC-B being the trustee for one of these trusts, but I can have LLC be the trustee for one of these, and I can have B be the trustee for one of those. That was simple, huh? I'm sure you got that, right? Yeah, I told you he's going to have to play it back. All right. So C is all the properties with tenant buyers in them. These are long-term investments, and I'm going to get taxed long-term capital gains if I hold them here, and I probably will. I'm going to get all the benefits of ownership of real estate. I can do 1031 exchanges. I can sell them on installment sales and not get taxed all in the year that I sold them. I get depreciation, which is the bigger here. I get depreciation on these properties. I literally could wipe out my entire tax bill if I have enough of these properties. Over here, I'm not going to take any of that. I'm not going to own the property long enough to depreciate it. And I can't 1031 exchange these short-term things here because this entity it buys with the full intent to sell, so it's truly a dealer entity, and it don't get any of the benefits of your investment entity. So again, long-term, short-term, IRA. Just don't mix this one with either one of these two. A couple more comments. B or C, I just said this, can be the trustee in states where an LLC can be the trustee. If an LLC cannot be the trustee, you're going to have a human be the trustee. But I suggest that human that's the trustee of that land trust does not have your last name. I don't really want your last name showing up on public record if they do a title search. If they do a name search, they will not find anything you own on public record because you don't own anything. Try to keep it that way. Okay. All of three of these will need an EIN number. They'll need a bank account, which means they're all going to file a tax return, and they're all going to need an operating agreement. Now, good news, this operating agreement for A is a special operating agreement designed specifically for IRA-owned LLCs, and it is on your Gold Club site, and it is marked operating agreement for an IRA-owned LLC. Okay, so you can go drag it out and fill in a few blanks, and you've got an operating agreement because you'll need one to take to the bank to open up a bank account, along with an EIN number. Okay? Remember, you do not put any of your funds in this LLC. And in fact, you can't even use your credit card to pay the state fee to open this because that means you're paying the expense of your IRA, and you cannot do that. So borrow somebody's credit card to pay the state fee, pay it back when you get money into LLCA. And you will as soon as you have an EIN number and you have a operating agreement. You can go to the bank and open a bank account, and then you're ready to go. Okay? And please don't form any of these entities if you don't know why you formed them. Look, I don't want you to go out and just open up LLCs because you heard me say it or you heard somebody at the seminar say it. You need to know why you're using them. And the truth is, if you don't have to do any of this, go do a deal. You want to just go do a deal, take a title in a land trust, and you can be the beneficiary. You can do that, and that's okay. But sooner or later, if you're going to get serious, you're probably going to need this kind of a structure. And actually, there could be more to it, but I'm not going to get into it right now. So that's probably enough to totally screw you up for now. So if you come to see me at Quick Start School or Business Management, I will go into this more deeply, but I happen to have a special event devoted just for the entire Structuring Your Empire. In fact, it's going to be on April 3rd and 4th. Yeah, April 3rd and 4th of this year here in Jacksonville. And it's 2 days, and one of them is with my attorney. And we're going to go through a whole gauntlet. Land trust by detail, IRAs by detail, all these entities we're talking about, when, where, and why, not only just for operating your business, but also estate planning stuff, which happens to be part of this package that you should get involved in, and tax reduction as well. Why? You're going to learn stuff from myself and my attorney that you're never going to hear anywhere else. And then I'm going to take you into subjects that get constant questions on, and make sure when you leave, you get this stuff. Look, I understand it takes a while to get this stuff, but give me 2 days and you'll get it before you leave. Now, I'm going to pick 2 people out of the room, and we're going to form an entity structuring and an asset protection chart for them. What we suggest that you do. You'll also see all of mine. You're going to see my entire estate plan, why we did what we did. It's going to be a credible event, 2 days, one with my lawyer. Now, that is also right before my Mastering the Phone event on April the 5th, 4th, and 5th, 3rd, 4th, 5th, and 6th in the same hotel. So entity structuring comes first, Mastering the Phone comes second. And you know what that would be about. That's 2 days of us mastering that closing call to the seller and visiting that house and hiring and training an acquisitionist. Very critical ingredient if you're going to do the pretty house business. We need to get you mastering the phone. We have a lot of practice in that class. We're going to invite into groups of 6, practice making calls, critique all the calls several times. By the time you're going to get out of there, you're going to be an ace on the telephone. So I'm telling you all this because getting to both of these events, we have a very, very, very special offer for you below, and you can even use gold points. In fact, Gold Club points. It's almost free, for crying out loud. I want you there more than I want you to try to pay a big fee to get there. Both of these courses, both of these classes are very important to your success. That's why I created them. That's why I will personally teach them. And that's why I want you there. So I made it really, really cost effective for anybody who wants to come. Continue this conversation for sure in much greater detail. And I'll try to even talk slower while I'm there. And by the way, my job is to translate what the attorney says into English. And I'm pretty good at that.
That's all for this edition of the Mentor Podcast. To connect with Ron and learn how you can attain financial freedom, as well as up-to-date strategies to grow and protect your wealth based on today's discussion, go to www.connectwiththementor.com.